What's up, guys? We are live. You got me, Crypto Noah, and my good brother Float Locker coming at you with another macro call. We're gonna talk about the markets, talk about some of our liquidity pools, and how we're operating under current market sentiment and kind of what we're expecting. Float Locker, how you doing today, man? How's Tokyo?
Doing good, man. Doing good. Tokyo's good. Just
Nice.
traveling and enjoying life.
Cool.
But yeah. What are we doing in this market? Nothing's really going on. Everything's sideways, choppy. Um, a lot of people are losing interest in this market. So I think that that's what I've been doing, and it's been very fruitful. So I mean, otherwise the volatility's been low past month or so. It hasn't been really spiking, but I'm positioned, and even though the APRs are lower, it's a long-term game. APRs average out over time, getting some good returns. I'm seeing about 140% APR on ETH USDC stable liquidity pools. And it's been good. And that's no incentives. That's just Uni V3. So, I mean, it's been good. 140% average over the past since March, just to clarify. What are you doing?
Nice. Yeah, I mean, I agree, man. It's like after the halving, things tend to get a little boring for a while, right? But then out of nowhere, things start getting crazy. And while this halving doesn't have as much of an effect because, it's only going down to 6.5 Bitcoin to 3.25 or whatever it is, we do have institutional adoption. The SEC is not going after ETH no more. They said it's not a security. We got the ETH ETF about to start trading July 2nd. We saw what happened with Bitcoin after the Bitcoin ETF happened. We saw Bitcoin reach all-time high before the halving for the first time in history. You got airdrops happening. So the layer 0 airdrop, I have been talking about the layer 0 airdrop for years, and I wasn't even like airdrop farming it per se. I was just using Radiant Capital because it was and is a good platform, and using the Stargate bridge. So now I'll actually share my screen here. And I made a video on my personal channel on how to claim the airdrop. You just got to get a VPN connected to Mexico. But I wouldn't have bought the layer 0 token just because, I have other projects that I'm more bullish on. But you can see right now, Revert saying I'm getting 358% APR. And this is tokens that I got for free. I've only been in this thing for a couple days, or 4 days now. It's been 4 days. I've already made 145%. My range is like 30% above and below. When I got in, it was originally right here. Picked the support real good. Never went out of range, just nicked the bottom. And now I'm back to break even with just free money that I'm in. And ZK Sync also did an airdrop. I haven't claimed mine yet, but the fact that protocols are starting to do airdrops kind of tells me that they think that bullish market conditions are, on the horizon, because no one wants to release a token when they don't think anyone's going to do anything with it, right? So it's like if we look at Bitcoin, we saw Bitcoin dip below 60K for the first time in since last cycle. It's pretty much been above 60K since we've been on this rally. And I like using the 200-day and the 62 EMA because I kind of use these. It's like people always talk about the whole death cross, but it kind of has like the same play here, whereas like when you have the 200-day on top of the 62 is like rolling Fibonacci. When the 200-day is on top of the 62, we're normally in bull market conditions, but you see when they cross here, the market drops pretty precipitously after that, right? And when it gets back on top of it, we're back in the bull run. And we saw that happen literally right here. If you would have just bought Bitcoin right here when it crossed, you would have rode it all the way up. And now this 200-day acts as like the mean. So it's like when the market's in a bull market, it always comes back and tests it, maybe goes below it sometimes, but it comes back and tests either both of them or one of them. And it looks like we're about to retest off of this and keep going higher. As we go into July, summer's usually pretty good for crypto. And the fact that the disparity between the 200-day and the 62 is getting wider and not more narrow, that tells me that there's a high probability that we're going to keep going up and to the right. You kind of see the same thing with ETH. You see the disparity between the 62 and the 200-day. And like I said, the ETH ETF is going to start trading here on July 2nd, which is a couple days. Same thing here. what you got to realize, guys, is that anytime we're in a bull market, you're going to see crazy drops. Like altcoins dropping 20-30% is normal in a bull market. Same for Bitcoin. So I think you just keep your head on straight, have a long-term time preference, look at the long-term market conditions, the trends, and I think this is going to be a good year.
Yeah.
What do you think, John?
Just to add to that, yeah, looking at the weekly, especially nowadays in the markets, people are very impatient. Probably the most impatient we've ever been, right? And the markets are the fastest they've ever been, right? They've been like compared to like the past. I've been trading since 2009. Even in the 80s and 90s when they traded, right? They had to call in their trades. Everything moves slow, right? People just had to be patient, right? But now that we have this access to the technology and to be able to trade just on our phone, even, right? People tend to get very impatient. I feel like when we talk about like weekly timeframes, it's such a significant factor in how you invest, but most people don't pay attention to it, right? They want the now. They want what's going to happen tomorrow. How can I get rich next month? So then they jump into these high risk, altcoins, and you get a drawdown. This is not even like a big drawdown. Like for those that have been in crypto for a while, this is like nothing, man. So like people freaking out here, and it's mainly the people that are freaking out are probably mostly in altcoins, right? They don't have a solid blue chip bag that they're holding and can ride the market waves, and then use altcoins to leverage a smaller position, right? People want to take their whole portfolio and leverage it up in altcoins, and yeah, we see these posts on Twitter, people making millions and within months, right? And just killing it in the market, right? But what you don't see, and most people won't post it, is people losing their ass on it, especially if they're leveraging off altcoins, blowing out their accounts. I mean, it's not funny, but at the same time, it's when someone says, "Wow, the market has," like say anyone on the street would be like, "Wow, this crypto market's in a bull run. Not in a bull market. You must be making money." And those people are probably like, "Well, not really. Not really. I'm losing money in a bull market, right?" And it's really something that we have to internalize and think about as a participant in the market. If you're losing money in this market, there's something wrong with the process. Something wrong with what you're trading. You're not properly managing your money, right? It's all about risk management and just being in assets that are proven, that are worthy of holding long term, right? So, I mean, I trade altcoins, but it's a very small percentage of my portfolio. I'd rather just ride Ethereum and collect this yield that we're getting out of liquidity pools. Most people are kind of, we talk about the weekly time frame and how we're in this bullish market, but people don't want to hear that. They don't want to be like, "Oh, I gotta wait. I gotta wait." I remember when Bitcoin was like 20K, and people are like, Bitcoin is done. It's high already, right? I'd rather try to get 100x and look at Bitcoin like since its bottom at what is like 4x, right? So that's still significant, right? And I just feel like I know I'm kind of rambling on, but I just really feel like people, especially people that don't have a lot of capital, it's really important for them to understand they should build a solid foundation, build that long-term portfolio account that they can hold long term, right? Not get into this whole trap of trying to trade and time the markets, because things get emotional. Most traders aren't successful, right? They just can't trade the markets, right? They can't time the markets, especially if they got a job. They don't. This is not something they do full time. I see it all the time. So, but yeah, like you were saying, we need to we see on the weekly time frame, we're in this bullish market. The weekly moving average, which is exactly what it means, right? Like that's the average price we should be at right now, right? And we're a little bit overheated, right? And we could come down to that price, and I don't mind. As a liquidity provider, I'm prepared for that, right?
Yep.
And people are freaking out when we break below 60K. I'm like, dude, this is like nothing. Like, wait till we hit 50K if we do, right? And I'd say even 50K is still a bullish consolidation, bullish structure, right? Once if we hit that moving average, there'll be a lot of people on the sidelines waiting to buy, because not everyone's a degen, right? There's people that know how to manage their money, and they're waiting for a good buying opportunity. So
I agree. Now I got a
can't.
question for you. So obviously I know you're a avid liquidity provider. Me personally, I like to use 20 to 25% of my portfolio to provide liquidity. And it doesn't matter like what market condition. I'm going to be providing liquidity in the bull market, in the bear market, and especially the sideways market, obviously, because that's the best time. For you and your portfolio, are you bull marketing, or are you bull marketing? Are you providing liquidity in
Yeah.
bull markets? And how do you structure your portfolio in terms of like what percentage of your portfolio do you typically use to provide liquidity?
So I'll go to the daily here
You
on
gotta look
Ethereum.
over the glass like one of them old players. Let me show you what I'm talking about.
Yeah, it just got like dark all of a sudden. And let me take this off. I don't need these anymore. We're on the daily time frame on Ethereum. Back in, and I've posted about this. People that follow me know I got into Ethereum pretty heavy at like 1500, and that was near like the end of the bear market, right? I watch Bitcoin. I keep it real simple. I use MACD, daily timeframes, weekly timeframes, and monthly timeframes to position myself, right? So I was like, okay, this is a low risk entry here, and I was expecting, and I was ready for a move further down to like 1200, 1300 ETH, right? And I was like, okay, I'll buy more down there. It never got down there during this time, and it started running. And then around 1800, I took my spot ETH and I parked it into Aave, borrowed USDC against it, and started farming altcoin liquidity pools like Link USDC was a great one. And it was giving me 8 to 10% per month in returns, right? So not only am I riding the Ethereum price up, but I'm also generating an extra 8 to 10% per month using liquidity pools, using farming Link. And then when we got up here in March, around 3,400, it was this candle I remember right here. I decided to get out of the market. I was like, okay, we went too high too fast. What's the risk to the downside? Okay, there's not much upside that could be had, but I'm willing to take some off the table, right? So I closed out the loan, and then I took my ETH and I sold it, and I went to a USDC heavy liquidity pool. I started around 3,700, 3,800, and I was just following price up, and I wasn't farming much liquidity there. I mean, at times I would, but then I was waiting for the drop, right? I was waiting for the pullback, and we finally got it here in March. And as price went down, I was generating a ton of yields and essentially buying the dip, right, on ETH. So I started around 4K, and I generated yield throughout. I'm still generating yield throughout all this time, and I brought my cost basis on ETH. I'm down close to like 3,200, 3,100 on Ethereum. So I'm in a profit right now, and I bought the dip on Ethereum, right? So I bought it back, and I'm making profit on top of that, right, with the yield. Now what I did, now that we're down here, the Ethereum that I bought, I am back to parking it in Aave. I borrowed USDC against it, and just farming Ethereum liquidity pools. So I'm not going to altcoins yet with the loan. So I'm essentially spot long Ethereum and then taking a loan and then farming Ethereum liquidity pools, right? To buy a further dip if we get a further dip down. So my scenario here now is A, if we go up, I'm long ETH. B, if we go down, I buy the dip and generate yields. It's leverage, but I keep it at a safe leverage. I use like a 1.4, 1.5 max. That's where I keep my health factor. Just so, you never know. There could be a crash or something. I don't want to get liquidated. I don't want to be too over, and too much in the danger zone, right? So, and then just leaving it be, right? And letting it farm those yields. And right now with the loan, my range is 3470 to 2970, and I'm generating on average about 100 to 110% APRs on the loan. So So while I wait for Ethereum to go up, I'm generating some extra income. So that's my position right now.
That's not bad. And then like what do you typically like yield farm with a certain percentage of your portfolio, or does it just change with market conditions, or are you just kind of free flowing with it?
Well, like Bitcoin and Ethereum make up the majority of my portfolio. I'd say 80% of my portfolio,
Okay.
and the rest is altcoins and stable coins. I'm in like a pretty large stable. I have a large stable position that I'm farming that's getting incentives, and it's generating about 30% APR right now. So while I wait, I generate yields on my stables and just
What
chill and
position
wait.
in what stablecoin pool is you in that's getting you 30%? Is it single side staking, or are you providing liquidity with
Nah.
USDC, USDT in a tight range?
Yes, exactly. The latter.
Okay.
UniV3, USDC, USDT, tight range. But if you look on Merkle, they give incentives. So if you want a stable coin incentive, it's good to look on there because they can pay some nice incentives. By itself, it wouldn't generate much yield, but with the incentives, it's been good. Like on 70K, like my amount of my position is 70K, and I'm generating about, I think, like over the course of like a few days, I would have like a couple $100. I really don't check it much. I just make sure it's in range, and that's it. I check it on DBank. It's in range, cool. That's it. Let it just give me those incentives. The incentives pay out to like end of July, I think. So, I'm just
I'm
chilling in that.
gonna have to hop in that.
Yeah, it's on base.
Oh, even better, cheap fees.
Yeah. But now
Okay.
you're gonna dilute my yields or my incentives. You're gonna come in with a couple mil.
We'll see what happens. We'll see what happens. Um, yeah, man.
Yeah, that's pretty much all I'm doing, And then like I have all this park, and the thing is, people think like you have to like always do something in the market. Like, oh, if I'm not doing something, I'm not optimizing. But no, it's the exact opposite. You get positioned, you have your plan, you manage your risk, you get positioned, and then you just wait like during these times. And then I'm just waiting, either for the God candle spike or the death drop, where everyone's like, oh my God, it's so over, right? I'm prepared for either scenario. So that's it. And I'm just waiting, that's it. Like, everyone could like try to time this market in the meantime. I mean, like trying to trade this market, like look at it, like we'll look at Bitcoin. Like most people trade Bitcoin when they're trading, right? Like what kind of range is this? Like 64, 62.4 to 60K. You know, that's not even like a 10% range, right? Like, it's like like the timing you have, like what is your risk reward, right? You're gonna constantly get stopped out, wicked out. Like if you're trying to trade and you keep tight stops, there's no right. You're gonna sit here spending all your energy trying to time this range here, and you're getting tired, especially if you're taking on losses. You're gonna get sick of it, and you'll be like, you know what, I'm done. And then that's when the move happens, right? And then you're like too exhausted or just too mentally exhausted to trade it. You might chase it, might be a scam wick, scam pump. You buy the top and then you get liquidated again. And you're like, you know what? I'm done with this shit. And then that's when the real move comes. That like the market is just a game, right? To take the money from the impatient, right? Just like Warren Buffett says, right? It applies here. Those that are impatient and wanting to make money in any market is going to have a tough time here, like trying to trade this. But like as far as providing liquidity, I'm seeing, well, with my current liquidity pool is, it's a very tight range, so it's 100 to 110%. But like a couple of weeks ago, I was in a wider pool, and I was seeing like 50, 60% APR on Ethereum, which you say that to somebody in crypto, they're like, that's garbage, right? But it's like, okay, well, yeah, it might seem like trash APRs, but you're not going to time the volatility. You're not going to time the moment the volatility expands. And say we get a drop down to on Ethereum to 3K. There's a level of confluence. There's a lot of people are watching this level. See, this is a battle here, and if we get down here, that's going to generate a ton of volume. There's going to be a huge influx of huge liquidity events, and that's what you want to be prepared for and generate yields during that time. because that's where things are going to get really, they're going to really take off. And my yields will like probably 10x, right, during that time. But the person that's not prepared or trying to time the market, especially with liquidity pools, you don't want to try to time the market. You just want to be in there ready for either scenario, right? And you just let the market do the heavy lifting. You wait for that event, and then that's what brings your averages up in APRs, right? And over time, that compounds and builds, and then you just consistently do that, and stay level headed, manage your risk, but be a part of those scary events. That's what you want to be as a liquidity provider. You're there to provide a service to traders, right? You got to think in the opposite side of the table, right? As a trader, we're all like, well, there's no benefit for me to hold Ethereum to 3K, right? And that's true. I totally agree as a trader, but as a liquidity provider, you're like, man, I hope it gets to 3K so it could like ramp up these yields. And especially with the confidence that the ETH ETF is approved, I'm like so confident in this asset that I'm like, I don't care if it gets to 3K, It's like the time to be buying the dip on this asset, right? Like you want to buy the dip on this. So
Yeah,
yeah.
no, I agree, man. I 100% don't think that the ETF getting approved is priced in 100%, because you think ETH should be at all-time highs right now. Like, we know institutional adoption is going to come in. I think this is going to be the catalyst that allows ETH to flip Bitcoin, the flippening narrative that we talk about all the time. Right now, you got ETH and Bitcoin institutional adoption. And then just to piggyback on what you were saying, it's just like when you are investing, whether you're trading, providing liquidity, low time frame, high time frame, there is always a level of patience that you have to have, right? You get paid to be patient. And when you're providing liquidity, like, this is something that's fairly new. And when I say new, I mean new to the public, because before concentrated liquidity, before decentralized exchanges, there was no way we could ever be a market maker ever. Like, trading options is the closest thing to it, but it's still different, right? So it's just like, you have to come at this with not a trading mindset, like you said. And like in our course, we talked about how, and on the channel period, we talked about how, like, if you miss the top 10 days in the S&P 500, going back 40 or 50 years, your performance difference is drastic. And it's the same thing with providing liquidity. You want to be in time in the market versus trying to time the market. You want to be in on those high volume days, because it makes a significant difference in the actual yield that you get. So, in our course, we talk about that. We break down everything. We show you how to come up with a good strategy that's in line with your portfolio, your personality, and everything like that. So if that's something that's interesting to you guys, click the link below. You can book a free strategy session with me or Float Locker, and we'll kind of demystify everything for you. But this is the opportunity of a lifetime to make passive income. Like you said, you feel like, oh, I got to do something. Well, liquidity providing allows you to set something up so that your portfolio is always doing something, but you're not having to do it yourself. Every time someone's making a trade, it's like you're giving them the liquidity and you're collecting them, giving them liquidity, collecting the money.
Yep.
And what you do with that money is up to you. You can compound it back into your pool to increase your yield, or hold it on the sidelines, add to your cash position, add to your altcoin position, add to your blue chip bag position, or whatever. It gives you another tool on your investing tool belt. So yeah, other than
Great.
that, I think that's pretty much
Yeah.
going into a good year. We had Donald Trump and Biden had their debate, which was comical. Oh my God, Joe Biden is a funny
I
guy,
heard
man.
about
He's
it.
definitely,
I haven't watched it. I'm gonna watch some highlights when I get a chance. But
yeah,
yeah,
definitely watching.
I'd rather just enjoy the traveling than watch two old guys debate on politics.
Yeah, well, if you ever want to get
Yeah.
a good laugh, you and your wife throw that on, and
I've heard some things, on Twitter, so it's funny. So I'm gonna check it out.
yeah,
But yeah,
no,
that's
that's
all I got, man. All right.
same here, same here. But hey, guys, we thank you guys for tuning in. We're gonna put a bow on this thing. I'm gonna go and catch the sunset. John is gonna go and put those glasses to good use, and yeah, we'll see y'all on the next one.
All right. Yeah. See you later.
All right, take care, guys.